Hi everyone, this is Paul Lang from Disciplined Trading Strategies with this week's Trade of the Week video. This is for the week ending February 3rd, 2019. The stock that I selected was GE from Monday the 25th. I had two favorites this week. I'll explain in just a second what they both were. The strategy was based on a Tier 2 novice gap with an advanced entry and simple management reward to risk about 4.1 to 1. I frequently mention that the Trade of the Week videos are not necessarily the biggest money makers. They're the ones that I think are the neatest, most perfect setup, the lesson to be learned, something like that. And I was torn because I had another stock this week that I'm going to quickly show you, and that was a trade on HPQ on Thursday. But GE did make it because it was just such a really nice trade. And also there's kind of a neat difference to look at between GE and HPQ I want to bring out. But the back third of GE was actually over a 6-to-1 reward to risk, and that's one of my bigger thirds that I've had, and overall was 4.1 to 1. So before we get there, I want to remind you that the free stuff this week is going to be the Monday night bi-weekly scanning session. I think this is going to be an interesting week in the market, and you may want to be there for that this Monday night, the 5th. If you are a member, you will receive your login Monday. If you are not a member, head to the homepage at Disciplined Trading Strategies and be sure to become a member. This is the trade I'm not featuring. This is HPQ, and this is the 5-minute chart from Thursday. This was also a gapping trade. Now, only about a third or fourth of my trades that I do are directly related on gaps, but they sometimes make the play of the week because when they work, they're often decent gainers. This HPQ was a very different type of trade, and it's one that I actually like better. The gap itself was unclear exactly when or where it would react, but after gapping down, this was a large gap. I wasn't really staring at this one, but it gave one of those perfect little what I call moment in time entries. That was the gap where it opened that day. Not showing you the daily chart because I'm not featuring this one. But that was the rally, and that was just one of those entries that's hard to pass. I took that entry and near perfect entry on it, and then it consolidated, as you can see, and then it started breaking down right through here and went into this beautiful bleed. And that's what I love about this one, just this bleeding pattern. I took a half when it started to bounce right there, and then I'm not very proud of the second half. I got out right in there. The first half was actually at 1977, the back half of 1963, and you can see it went all the way to 1940. I left about a full risk unit on the table here. Not sure why I even got out there. I have to go back and look. I wasn't upset because it was a nice trade. But this is a stock where you take your time, you find the great entry later. That's what I really prefer to do. GE is a little different. GE, even though it turned out to be a great play, is a real nail biter because you're often doing these first thing in the morning. They're sloppy, and you have to have a very good confidence level of what the stock's going to do. So GE on this particular day gapped to right there. And since it gapped above the 200 period moving average, I was very bullish on this stock. No, that's a joke in case you don't know me. Those of you that do know me know I'm kidding. With gaps, you don't even look at moving averages, at least not for the normal reasons you think you look at them. It doesn't matter at all. I don't even see that moving average there until I did this play of the week video. I didn't even notice it. The stock dropped, and I knew it was going to drop. I had a very high confidence level, but this confidence level came from the daily chart almost exclusively, and the area was gapping too, and what had happened before this. But the intraday pattern, of course, when you're getting in these early, gives you very little to work with. Here's the 15-minute chart just so you can get some perspective of how big the gap was. The gap was way up to here, and you can see based on the prior day's ranges, there was a pretty big gap. Big does not make it novice at all, but if it is novice, big is better. So that's a little perspective of where it opened and how quickly it dropped. That's a lot of drop very early, and then it continued to drop all day. So finally, here's the 5-minute chart to give you more precise where the numbers were. I did have to try this twice. So even though it was a 4-to-1 overall, I gave back one on the first try. I tried entering in the first minute, and I actually could have stuck with the trade. It would have been just fine. I just barely got shaken out after that first minute bar. This is a 5-minute chart. And I re-entered about 9 minutes into the trading day. The numbers on re-entry were 1163 by 1176. Now, here's the confusing part. It took me a while to figure this out. GE underwent a 104 to 100 stock split. I don't follow these things. I wasn't aware of that. I knew my numbers, and when I went to pull this chart up, it was after Tuesday, and the chart had changed. The numbers are different. So because of that stock split, your chart automatically adjusts. So in your head, to make the numbers match, that's about 44 cents you have to add onto the stock price. So the high, rather than being about 11.30 like it shows here, was actually more like 11.77. So I got in about 14 cents off the high of the day. And you'll have to use that adjustment about 44 cents to add to the chart to make these numbers make sense, if that makes sense. So the only thing I'm not proud of on this trade was because I took a hit the first time, I was very quick to get safe and take a quick target. I took that quick drop to retest the low of the day at 1146, which again, if you're looking at the chart, is more like 1102 or something like that, also the whole number. But from there, I did things flawlessly. Target 2, 1030 reversal time, right above the whole number at the time. Of course, now that 1102, you have to look at that as being 44 cents less than that. And then the back third was a walk-away hold to the end of the day, and it worked, getting it just about 10 minutes till close. I trailed out by a penny or two as it was getting into close at 1082 based on the old price. So there would have been about 1038 based on the chart that you're looking at. Overall, nice trade. A couple of lessons from here. The only thing I did wrong was taking that first third early. This is going to be kind of a walk-away trade. I wanted to take some and then walk away on the rest. The walk-away made some nice money. It bled all day, and it turned out to be one of the better trades. The same was true actually for HPQ. That stock, I was just ready to walk away for a while during lunch, and I got stuck in my chair, and I probably would have made more money if I walked away on that one as well. So there's the GE being featured. HPQ is a little side comment, so I can compare the two. I definitely like the HPQ type of trades more, but the GE type of trade, when you get it right, they are just wonderful. These trades are done in the DTS trading room, where we take a calm, relaxed, strategic view of things. As a matter of fact, you might even want to call it a disciplined way of trading. And we prepare for the day and try and hit the best trades that we can during the opening part of the day, and then either close up shop early or just let some trades go to the back half of the day. Occasionally, we do return during lunch to find additional trades if the market warrants it. If you want to take a trial of the DTS Trading Room, just visit the website on the services page, and you'll see a spot that you can do that. Until next time, this is Paul for DTS. Good trading, everybody.